So what is our verdict on this overall discussion in terms of fiscal push? Obviously, there are positives and negatives, probably more positives in the longer run than any kind of short-term negatives that come out of it. But it's still important to list down all that is positive and all that we think could be a little bit of a problem in the near term around this data point, right? So the first part, let's look at the positives. So obviously, a very positive and bold move in the long run. The government clearly indicated that it means business and it wants to kind of ensure that businesses have a clean run. The government has clearly also said that rather than us spending in the economy, we want investment to kind of pick up in the economy, and that should be the key driver. And that, from a longer term perspective, for someone who's looking India as a macro market, is an extremely positive step that has happened. It should result in more capital flow into India, purely because a lot of the companies would now start getting interested in putting manufacturing hubs in India, more because we are now at sort of a parallel or a par with a lot of the other global nations. Plus, the benefit that some of the units that are going to be put up now in the next 4 or 5 years and start commissioning in the next 4 or 5 years could attract a tax of only 15%. That's an even bigger advantage or a kicker. So local investment should pick up, and that should kind of create sort of a multiplier effect. Earnings to go up for companies by 10 to 12%, and these are recurring earnings. Remember, it's very unlikely that government is going to come back and increase the taxes now. So they would have thought about it and they would have said that this is needed. So they went ahead and kind of cut this down. So it's a recurring earnings move for a lot of the firms, specifically mid-sized firms who are not able to take advantages of some of the exemptions at this point of time. That there's an increase by 10 to 12 to 13% for most companies that's going to come in. So that's a benefit, and those companies will have more to kind of reinvest, more profitability, more margins. Valuation is going to get a big boost, purely once again because of two factors. One, the government indicating that it's trying to kind of create a conducive environment, and the fact that earnings are going to spike. So to maintain the same valuation, there is going to be a spike in the markets, in the stock prices. If you look at it, what are the key negatives? Right now, in the short term, the fiscal math is going to remain under stress. Bond yields are going to spike, or they've already spiked a little bit. So interest rates consequently are likely to remain a little bit elevated in the near term. And that's a little bit of a challenge that's going to happen. The current slowing down of growth in India is more because of consumer demand slowing down. Right. So unless that is addressed, and it's difficult to address that purely because, this seems to be more than just temporary blip in terms of demand. When numbers of auto companies are falling by 30%, 40%, you can't pinpoint on one specific reason and say, okay, this is happening because of Ola, Uber, or this is happening because of GST, or this is happening because of BS4 vehicles kind of going out. It's important to realize that it's also quite possible that we had 15 years or 10 years of good solid growth in a lot of the sectors, and those sectors might just have been saturated in the near term. So to that extent, there is going to be a demand moderation, at least for a year and a half in between, where it's more just a cooling off of a very, very fast growing economy. Right now, if that is the case, then why would a corporate add more capacity given that the current capacity is not getting utilized? In fact, we've read about Ashok Leyland shutting down plants for 60 days in this 60 days across 5 plants. So on average about 12 days a plant in this particular quarter. Maruti has shut down production. Auto ancillary companies have shut down production. All other companies, with respect to steel, with respect to cement, are operating at below capacity. So why would someone really want to add capacity immediately, even if you think that it's going to be beneficial in 2-3 years? Think about it, that the benefit of taxation is only on profits. You don't make a benefit unless you make a profit. So unless a corporate assumes that they're going to make a profit because of this new capacity, it's going to be very difficult for them to agree to put up a capacity in the near term. Of course, on the margin, if I was planning to put up a capacity in the next 2 years sometime, that kind of becomes a more relevant invitation for me now to do that quickly. Right? There is an argument that the corporates might pass on the price rise, to move demand. Now, think about it. Let's take, for example, Maruti. Average car price is going to be 5 lakh rupees, and that's their revenue per car. And if I want to look at net profit per car, they probably operate at a 10% sort of a net margin. So net profit per car would be 50,000. Argument's sake, I'm just using hypothetical numbers, that a car manufacturer who's selling a car at 5 lakh rupees is probably going to make 50,000 car is net profit. If net profit per car is 50,000, then profit before tax per car should be about 70K. That takes my net profit per car to approximately 50K. Now there I'm looking at a tax rate of approximately 30%. Cut that down by 5% or 6% at this point. So if you cut this rate by 5%, practically the benefit in terms of the tax that you're paying is 20K. That will probably go down to 13K, 13 to 14K. 13K to 14K. So you have a net benefit of 6 to 7,000 that the company makes. Even if the company chooses to pass this on to the consumer, will that 6 to 7,000 really move the demand meaningfully? That's not necessarily true for a lot of the companies, right? So that's something that we need to keep an eye on. It's a long-term positive move, but in the short run, the economic markets need to self-correct. The demand-supply situation needs to resolve itself by giving incentive to firms to put more supply. Doesn't necessarily solve the near-term problem. So make no mistake, we are bullish on this move in the long run. I think this is a very bold step from the longer run perspective and a much awaited kind of a step from the corporate India perspective. But in the near term or short term to medium term scenario, this doesn't suddenly create a demand out of nowhere, right? And do remember that this was one of the strongest bullets that the government had to fight the crisis, and they have used it now. If the crisis does not resolve itself, then what is the next bullet that is going to be used is going to be a little bit interesting. Again, we are not sure whether in the short run this is really negative or positive. In the long run, this is undoubtedly positive, but in the short run, the verdict still remains to be seen. The market might have kind of reacted positively more because markets look at a longer term picture, but we do need to be careful about what it can do to revive near term demand. Can it really pull the economy growth into a different orbit from where it is right now? That remains to be seen. Would love to hear your comments on the same. Thank you.